Imagine a company that's, well, a household name, one you probably interact with almost daily. Now picture them facing, intense competition, rapidly changing consumer habits. But instead of just surviving, they're strategically transforming themselves. How does a massive entity like that pivot in real time, invest billions, and redefine its core business while still delivering for shareholders?
That's precisely what we're here to dig into today. Welcome to the Deep Dive. Our mission is basically to take you inside the recent Q2 2025 earnings call and financial reports from Comcast. We'll unpack the critical numbers, try to understand their bold strategic moves across, well, all these diverse sectors like broadband, theme parks, media, and kind of glimpse how they're building for the future. We're pulling insights directly from their earnings transcript and financial docs. So, we're aiming to give you a shortcut to being truly well-informed.
Exactly. Get ready because we're going to uncover some pretty surprising facts and pivotal decisions driving this global media and technology giant.
Okay, so let's zoom out first. The big picture for Q2 2025. Comcast reported consolidated revenue increased by 2.1%. Adjusted earnings per share, EPS, that's, a key profitability measure, saw a solid 3.3% increase to $1.25. And they generated, wow, $4.5 billion in free cash flow. Pretty impressive.
Yeah, and their consolidated adjusted EBITDA, which gives you that clearer look at operational profitability. That rose 1.1% to $10.3 million. But what's really eye-catching, I think, is how much capital they returned to shareholders, $2.9 billion. That was through $1.2 billion in dividends, and a whopping $1.7 billion in share repurchases, which actually reduced their shares outstanding by 5% year over year. That's pretty aggressive, isn't it? I mean, some might argue that while buybacks boost EPS, they can sometimes, mask slower organic growth. What's the balance here for Comcast?
That's a fair point. Yeah.
Yeah.
Buybacks definitely give EPS an immediate boost, but it also signals confidence from their side, right? Confidence in their long-term cash flow and maybe a belief that their stock's a good buy right now. And speaking of the strong bottom line, you might have noticed this striking figure in their net income. Net income attributable to Comcast was $11.123 billion. That's a huge 183.1% increase.
Whoa, okay.
Yeah, but hold on. This wasn't from their day-to-day operations alone. It was primarily driven by a $9.4 billion pre-tax gain from selling their 33% interest in Hulu. That finalized in June 2025. Total cash proceeds, $9.6 billion. So it's a significant one-time event that really juiced the bottom line this quarter, essentially cashing out a major asset.
Right. That Hulu sale is massive. It really reshapes their portfolio immediately. But beyond that, it seems they're really doubling down on what they call their core six growth drivers. These are broadband, wireless, business services, theme parks, streaming, and studios. Together, these businesses apparently represent nearly 60% of their total revenue now, and they grew at a high single-digit rate this quarter.
Yeah, and this isn't just like shuffling resources around. It feels like a profound strategic declaration. They project that their exposure to these growth areas will jump to roughly 70% of total revenue in the next couple of years. And that follows their plan to spin off the linear cable networks into Versant, this new company, and the recent sale of another business.
So they're shedding the slower stuff.
Exactly. By shedding those slower growth linear assets and doubling down on these core six, Comcast is positioning itself as more of a growth-centric tech and entertainment powerhouse. This pivot, it aims to attract different kinds of investors, maybe unlock higher valuations. It signals a clear shift, from the old media conglomerate model to something more agile, more future-focused. It's definitely a high-stakes gamble on these emerging trends.
So what does this all mean for you listening in? This isn't just about big numbers or, corporate restructuring. It's about how a diversified company like this reorients itself to a changing market. When a giant like Comcast shifts its focus so significantly, how does it impact the services you use every day? Your internet, your entertainment. That's really the core question here, I think.
Precisely. And to truly get how this massive transformation affects you, the consumer, we have to talk connectivity and platforms.
Yeah.
Because, Epic Universe might be dazzling, but for most of us, Comcast's core business is still about getting those bits and bytes into our homes. And that market, well, it's a brutal battleground right now.
It certainly is. They acknowledge an intense competitive environment in broadband. Fixed wireless, fiber competitors, they're active. And that competition, well, it showed up in their subscriber numbers, 226,000 broadband subscriber losses in Q2. That's a significant number. How much of that is just pure competition versus, say, that typical negative seasonality or the ACP program ending? Is Comcast really comfortable calling the situation stabilization?
Well, it's a bit of a mixed bag, They do attribute some of it to that negative seasonality, fewer people moving or signing up in Q2. There was also a slight uptick. They said not material, but still an uptick in non-pay disconnects, people not paying their bills. And yeah, that might be related to the end of the Affordable Connectivity Program, the ACP, which subsidized internet for a lot of households.
That makes sense.
But despite those losses, they're also pointing to what they call encouraging early signs of stabilization. Like roughly half of eligible new customers chose their 5-year price guarantee offer. That's interesting. And there was a 20% increase in new customers taking gig plus speeds, which helps their revenue per user, their ARPU.
Okay, let's unpack their new go-to-market strategy then. It sounds like they're really trying to shake things up. 7 key elements aimed at this competitive landscape.
They really are.
Yeah.
Okay, first, moving from all those local offers to one consistent national pricing structure. Think simpler, less confusion. Second, simplifying their broadband offering down to 4 flagship speed tiers. Again, simpler. Third, these everything-included packages. So, unlimited data, advanced gateways for fast Wi-Fi, low lag for gaming, streaming, security, the whole shebang.
Right, trying to bundle the value.
Exactly. Fourth, they're actually lowering everyday pricing on some tiers. Fifth, they've introduced both 1-year and 5-year price guarantees without contracts. That gives customers choice and certainty.
That's a big one, the no contract guarantee.
It is. Sixth, they're throwing in a free Xfinity mobile line for 1 year for all new and existing customers. That's aggressive. And finally, number 7, they introduced a premium unlimited mobile plan. 4K streaming, more hotspot data, device upgrades, that kind of thing.
Okay, wow. That's a lot. Those 7 elements sound pretty comprehensive, but which one do you think is the biggest game changer? And maybe more importantly, can these bundled approaches truly differentiate them when competitors are often simpler or, hyper-focused just on fiber speed?
Good question. I think the biggest potential game changer is probably the combination of that simplified pricing, the multi-year guarantees, and the free mobile line. It's a very aggressive play on value and trying to keep customers, retention. It aims to make their offering feel more predictable, more comprehensive, maybe move away from that bill shock perception people sometimes have. And beyond just pricing, they've also focused heavily on just making it easier to do business with them. They talked about reducing friction across all channels, online, phone, chat, app. Like they improved their digital sign-up process, removed 5 steps, and apparently saw over a 20% improvement in purchase conversion rates.
And they've gone big on AI for customer support too, right? Using Google's AI platform.
Yeah, they upgraded their operating system for customer interactions to Google's AI. The goal is a significantly improved digital experience, quicker support.
It's almost like they're trying to remove every single reason not to choose them, or maybe every reason to leave.
That seems to be the goal, yeah.
Yeah.
And they also keep hammering their network advantage, highlighting gig plus speeds everywhere, their ongoing DOCSIS 4.0 upgrades. That's the latest cable tech for multi-gig speeds. They say they're ahead of plan on that. And a key differentiator, they stress, is their Wi-Fi network performance inside the home, matching the core network's capability, handling lots of devices, low lag needs.
Right, the whole in-home experience, not just the pipe coming in.
Exactly.
Now, I found the wireless numbers particularly compelling, their best quarter ever, adding 378,000 new lines. Xfinity Mobile now has 8.5 million lines. That's, 14% penetration of their residential broadband base? Seems like a lot of room to grow still. What do you think is driving such strong growth in wireless when their core broadband is facing these headwinds? Is it just the bundling? Or something more?
It's definitely heavily driven by the bundling and the value proposition they offer, packaging mobile with broadband. Their convergence revenue, where mobile and broadband are integrated, saw healthy growth, up 3.7%, and wireless revenue itself grew in the high teens. So it indicates their strategy of using mobile as this sticky value-add service for their broadband base is really, really paying off.
Okay. And shifting slightly, business services, revenue up 6%, EBITDA grew nearly 5%. This includes that acquisition of Nitel back in April, right? Enhancing their enterprise customer service.
Correct. And they noted strong momentum there, especially in enterprise solutions, tackling complex stuff like multi-location connectivity, cybersecurity, areas where they continue to invest and lead.
What's truly fascinating here, I thought, was how much the value of those advanced solutions has grown for them. 3 years ago, for every dollar of connectivity they sold to businesses, they sold maybe $20.20 of advanced solutions.
Today, that figure is apparently around 50 cents.
Wow, so more than double.
Yeah. It shows they're not just selling internet popes anymore, right? They're selling comprehensive, integrated solutions for businesses. That really reinforces their competitive position in that market.
And to bolster their mobile offering for businesses even more, they've announced a new MVNO agreement with T-Mobile. That's in partnership with Charter. An MVNO, right, means they use T-Mobile's network to offer their own branded service. So this is an integrated solution for businesses alongside their existing Verizon partnership.
Yeah, it shows a clear strategy to expand their reach and offer a more robust, integrated package for businesses, whatever their size. Smart move.
Okay, let's move on to content and experiences. This is where we see some really big bets in entertainment. Comcast isn't just about screens anymore, it feels like. They're building entire universes. The opening of Epic Universe in Orlando back in May, that drove a substantial 19% increase in theme parks revenue for the quarter.
It's truly remarkable. The early results sound amazing.
Right.
Epic Universe is apparently already driving higher per cap spending, higher attendance across the whole Universal Orlando resort, strong food and merchandise sales. And crucially, they said minimal impact on attendance at the existing parks. Universal Studios Florida and Islands of Adventure suggests it's actually expanding the overall market, not just stealing visitors from the other parks.
Yeah, bringing more people in for longer stays, maybe?
That seems to be the hope. It's touted as their most technologically advanced park ever, getting high praise for attractions, immersive environments, plus 3 new hotels on site.
It's fascinating, isn't it? Tracing their journey from a cable company to building these incredible immersive worlds. It makes you wonder if in, say, 10 years, our main interaction with Comcast will be less about the internet bill and more about planning a trip to a new theme park land. They're really betting hard on the experience economy.
Absolutely. And their near-term focus now is apparently on expanding ride throughput at Epic, getting more people through to reduce those early wait times and constraints. The goal is transforming Universal Orlando into a true week-long destination.
And the pipeline beyond Orlando is pretty stacked, too.
Oh, yeah. Universal Horror Unleashed opens in Vegas next month. A second year-round horror thing is being developed in Chicago. Universal Kids Resort in Texas targeting 2026. And that new park outside London slated for 2031. So long-term investments.
What about the spending? Capital expenditures.
Right. CapEx for content and experiences actually decreased by 13.1% to $734 million in Q2, mainly because Epic Universe just opened. They anticipate a bit of a break in CapEx for a couple of years now, post-Epic, before it ramps up again for that London park project.
Okay. Shifting now to media. Their strategy seems to be running NBC Universal's linear and streaming assets as one holistic media business. Makes sense? They just closed their most successful upfront ever. That's when advertisers commit their budgets, right? Record total sales, largest sports commitments ever.
Yeah. And Peacock was apparently a standout in that upfront. Revenue up more than 20% year over year, representing over a third of NBC Universal's total ad volume in the upfront. That's significant.
So the strategy of bundling and leveraging their library seems to be working for Peacock.
It looks like it's starting to pay off, yeah. Its EBITDA losses improved significantly by nearly $250 million compared to last year. Landed at a $101 million loss this quarter. Paid subscribers held steady around 41 million, driven partly by that new season of Love Island's USA, apparently. Top streaming reality show for its run, brought in lots of first-time subscribers, and apparently 2/3 of them watched other stuff too.
Right. Engagement beyond the one show.
Exactly. And Peacock is really trying to differentiate itself with live sports.
Yeah.
A robust offering.
And this is where it gets really interesting, I think. Their position strengthens significantly with the NBA coverage starting this fall, Q4. They anticipate this will make Peacock stream more live sports hours than any other streaming entertainment service in 2026. That's a huge claim.
It's a massive investment, that NBA deal. The cost will amortize over the full season, of course. And reflecting this premium content, they recently announced that $3 price increase for Peacock, rolling out now for new subs late August for existing ones.
That's a bold move, raising prices when competition is so fierce, isn't it?
It is, but it also signals confidence in the value they think they're delivering, especially with exclusive live sports like the NBA. They're betting people will pay for it. In studios, they highlighted strong performance from recent movies. How to Train Your Dragon, debuted in June, grossed over $600 million worldwide so far this year, pushed that franchise past $2 billion total.
Wow.
And Rebirth, the 7th installment of their $6 billion franchise, premiered in July, already passed $700 million worldwide this month.
So launching 2 huge tentpole films so close together, that was a big upfront investment, which naturally squeezed their Q2 profits a bit.
Exactly. You spend the money upfront for marketing and distribution. But think of it as planting seed, like you said earlier.
Mhm.
The real box office harvest, the financial benefits, will largely land in Q3. And they're looking forward to several more releases in Q3 too.
Hmm.
The Bad Guys 2, Nobody 2, Downton Abbey the grand finale, Him, Gabby's Dollhouse the movie. Busy slate.
Okay, looking at the long game now. Financial health, future outlook, their capital allocation strategy seems consistent.
Yeah, the formula remains. Reinvest in the businesses, prioritize a strong balance sheet, and return meaningful capital to shareholders' dividends and those share buybacks. They expect to keep shrinking their share count by mid-single digits annually through those buybacks.
Now, how do external factors play into this? There's new tax legislation in the US, right? That sounds like it could be a significant tailwind for them.
Oh, absolutely.
Yeah.
It restores 100% bonus depreciation for property acquired after January 19th, 2025, and it reinstates immediate deductibility for domestic R&D expenses, retroactively to 2022.
Okay, translate that for us. What does it mean in practice?
Think of it like a billion-dollar boost for Comcast's plans. They estimate it'll result in roughly $1 billion in annual cash tax benefits for the next several years. A lot of that relates to infrastructure investments, like building out that faster broadband network. It essentially makes it cheaper for them to invest in things like fiber and DOCSIS 4.0, which means, you could potentially see improved speeds and reliability sooner, maybe without them having to dig quite as deep into their own pockets for the investment.
Got it. So, what does this all mean strategically for them?
Well, they believe this legislation helps fuel their capital allocation formula. It supports their big vision of having two multi-gig symmetrical wires running into the home across their U.S. footprint, basically ensuring they're well-positioned for the competitive future against fiber and whatever comes next.
Right. And finally, that planned spin-off of their linear cable networks into Versant. Still on track.
Yep. On track for late 2025 or early 2026. They expect this move to be a great thing for the growth businesses.
Yeah.
Why? Because it increases the percentage of total revenue coming from those growing segments we talked about, the core six. It simplifies the Comcast story for investors, and it allows Versant, the new company, to use its own generated cash for whatever it wants to do in the future. It's a strategic unbundling, really, trying to unlock value and increase focus.
Okay. And that's our deep dive for today. We've taken a pretty comprehensive look at how Comcast is strategically adapting. Evolving markets, big investments in next-gen connectivity, high-impact entertainment. From that revamped broadband strategy, customer-friendly pricing, advanced tech, to the grand opening of Epic Universe, and Peacock's bold moves in live sports, they're clearly not standing still. It's almost counterintuitive, isn't it? In a quarter where they lost broadband subscribers, their wireless business had its best quarter ever. That alone tells you quite a bit about where Comcast sees its future growth coming from, right?
Indeed. It really makes you think, what does Comcast's integrated approach, connectivity, content, experiences, what does it tell you about the future of how we consume entertainment and stay connected? And as companies like Comcast keep investing heavily in the infrastructure, aiming for those two wires into every home, how might that reshape your choices as a consumer in the years ahead? Something to ponder.